So a quick YouTube for all my UK viewers. Now, what I'm about to show you is my new thing. And my new thing is ANEWfn, which is a new financial information site, which is completely free. And it has free real-time, unlimited, and it has free level 2, unlimited. Some of you will know that real-time in the UK stock market is £10 or £12 a month if you want to subscribe for that. And if you want to get level 2, you're looking at £30 a month. Well, our level 2, which we're just going live with now, it's out. You can just go on and give it your info, tick a box, that kind of thing. And you can come in and use this. Probably by the time you see it, it'll be the weekend, but it'll be live next week as well, all through the week, all through the markets, completely free, no subscription. In fact, at the moment, no advertising, but I can't guarantee that forever. And you can get level 2 and real-time prices for nothing, for free. It's on me. So go on over to ANEWfn.com, take a look and enjoy, because this is the only place where you'll get free level 2 anywhere. Where we are now, but we're going to be adding a lot of features over the time, and we're going to be building this product out for the community and for what the community wants and the sort of tools that it's really needs. So come on along, be part of the community, have a look at the free real time and the free level 2. It's unlimited and it's free. Come on down. Hello everybody, so here I am back in London, back in a black cab, and the funny thing is my friend at the front there is a watcher of our show, so say hello to everybody.
Hello, good morning everyone. Happy Monday.
So it's fun because I get in and I say Reform Club please, and the cab driver goes, I know you, I watch your show, I'm a gold and silver guy. And I thought, oh, that's amazing. And it is amazing for me. I mean, I do this for pleasure as much as anything else, and I do it for the reaction of viewers. And to get in a cab when I've got a viewer who's a fan, I say that, he said he's a fan. You're a fan, aren't you?
Of course I am.
Good. Good. So that's incredible. So I love that. But anyway, it got my brain going because Mr. Trump, so I should say, let me start that again. President Trump is about to make us all a lot richer than we were before he said the following. What he's actually said is every American's going to get $2,000 because that's what they're making on tariffs, and he's just going to hand it out to people. Well, that is inflationary. Tariffs are uninflationary, de-inflationary, disinflationary, because it takes money out of the system and it hands it straight to the government, because you have to pay more, so you've got less that you can buy, so demand goes down, so, supply's the same, prices fall. So anyway, he's about to give everybody $2,000, and a lot of people will go straight out and spend that, and that will mean demand will go up, supply won't go up, so that will be inflationary. Now, by my calculations, if you look at inflation before the tariff things, let's say December, inflation was running at 3%, and now it's running less, but he's basically re-injecting the money that's taken inflation down, because even though prices have gone up, people have less money to spend. So it's all about money supplies inflation. So you can put prices up and it looks like inflation, but it isn't, because other prices will fall because there's no more money to go around. So inflation is caused by printing money. Well, handing out this money back is a kind of inflationary push, because demand will go up because there's more money. So it will increase money supply. Anyway, so that means gold and silver is going to have a tailwind because he's handing out this inflationary lump. In the same way back in COVID, they had handouts. Much of that inflation that you saw from COVID came from direct handouts to people because they went out and bought stuff. I mean, where I was, the moment they handed out the money to normal people was the moment they went out of stock in liquor, because people were buying beer and wine. It's France, of course. And then they went straight and went, hey, I got more money. Let's buy whiskey. Let's buy gin. Let's buy Ricard. And, you know, that's the way printing money makes inflation. More demand, same supply, prices go up. So what we're going to have from this handout is, well, it's a stimmy, right? And stimmies make inflation. So we're going to get inflation from this. Not terrible, but it will be back to where it was before Christmas, which is 3%. So we're going to have a little bit of a blip in inflation because of this. And that, of course, is going to push gold and going to push silver, and probably already is, because today they're all up. Now, it's not just Trump announcing he's going to give everybody $2,000. It's because the American government is going to start working again pretty soon now. According to the news, they've done a deal to get it going again. And the Treasury's got piles of cash which has been piling up, and that cash will now flow into the system. People who are owed money will suddenly get it, and that's going to go into the banks. The banks are going to have excess money and they're going to put it to work, so that's going to push equities, and we're seeing that already this morning. But that's going to push equities. It's also going to push gold and silver. So we're on a run now up to Christmas, so you'll see gold and silver at very least staying where they are. Equities will run, and you know, you just have to watch this stuff, and if it's going on a run in gold and silver land, you'll know why. It's because Trump is going to hand out $500 billion, I calculated roughly, and that's going to go straight into the economy, and that's going to cause, I don't know, 1, we'll be lucky, 2, could happen, 3% inflation, but it's a one hit. But if he does it once, why won't he do it again? Why won't he do it again after that too? So that's a very interesting dynamic. It's a new idea, kind of. It's kind of South American, writing everybody a check. But anyway, we'll see how it pans out. It's the opposite side of the tariff trade. So tariffs take money out of people's pockets, and then he writes them a check to put it back. But the wall of tariffs is there to make people start building factories in America, which is the whole idea. So anyway, that's where we are today. Let's see what happens. I predict, I'm going to be wrong, I'm going to be wrong maybe, I predict that gold and silver will take a nice spike up, and we're going to get a run now in equities up to Christmas. Well, we're all in that, so we can't really complain. So thank you very much, President Trump. You're doing me good. Anyway, thanks very much for watching. Please subscribe and like. We like that. See you again very soon. Bye now.
Hello everyone. Well, it's been a couple of days, and now I'm going to talk about gold. First of all, I'm going to talk about ANEWfn. For UK users who are interested in stock market prices, we've got free level 2 order book, which costs 30, 40, 50 pounds a month most other places. In fact, everybody charges quite a lot for it. It's free on ANEWfn. And we've also got free real time, all day, uncontended, as much as you could like, all you can eat, etc, etc. So anyway, UK guys, go check out ANEWfn. Anyway, that message is over. Let's get back to gold. So here we are. We had that pullback. Everybody went, oh no, oh no. And I can understand that. I've got quite a lot of gold, to say the least. And I was going, oh no, as well. But in these situations, the thing you have to work out first is, what call do you have to make? Now for me, as you may have seen in my members only video, there's an idea about repricing. So gold has repriced. It's gone up like a rocket. It's hit a limit, and now it's repriced. And it's kind of hovering. That's the way to look at it. And if you looked at Bitcoin, it's hovered for pretty much a whole year. And it can hover for a long time for gold too. But the decision is, are we halfway there? Are we the whole way there? And what is the repricing limit we're at, and how do we know if it's broken out? Because if it breaks down, it will go down quite a lot. I mean, it could go down to like $3,200, which should be very sad. If it breaks up, it could go up quite a lot. It could go up to, say, 5,000, and here's a picture of that right now. That's really the only decision that you have to make is, are we halfway up this move, or are we the whole way? Now, I look at it like this. And here's another chart, by the way, that would show the repricing sideways ranges that we would be in if we're in a repricing equilibrium that might go on for some time. So this is the range which, if it goes through the top of that, you'd be thinking it's on its way either up to 5,000 like that previous chart, or down a long way. So this is the range, and as you see, the last range is very similar, and it would be because that's the mechanics of the market itself. But anyway, back to where we are right now. So what's the dynamic? What is making gold go up? Now, a lot of people say it's the death of the dollar, inflation and all that good stuff. But, you know, there's always been inflation. The dollar's always been dying, according to the pundits. It's not dead yet. In fact, it's worse. It's really, really strong. I wouldn't say it's worse, but you know what I'm saying. The dollar is not weak. The dollar is not dying. The dollar is strong. And people say things like, oh, well, the BRICS are going to have their own currency, which, I don't know, it shows to me a complete lack of a clue. Let's look at BRICS. Brazil, would you want to hold that currency? I don't think so. Russia, would you like to hold that currency? I don't think so. India, not a currency noted for its stability. China, well, that's another matter. So you could say, is the dollar going to die to be taken over by the renminbi, yuan, or whatever you want to call it? Well, the simple answer is no. The Chinese currency is not going to take over for the dollar in the near term because they don't want it to. The moment you are the reserve currency is the moment you've got to have a trade deficit, because the whole point is you export your money to the rest of the world and it becomes the money that everybody uses, which has its benefits. But if that means running a trade deficit for years and years and years, it also means going bust. Well, you know, you're seeing that going on in the US right now. Why is it up the creek? Well, it's run a massive trade deficit for decades. And of course, that's the same as spending more money than you earn. Well, you could say they're not spending more money than they earn in the US because they're printing confetti and that fills up the hole. Well, you can't keep doing that forever, can you? And funny enough, here we are. And that's why tariffs are happening, etc., etc., etc. There is no replacement currency for the dollar. And if there was, it would be the euro. And if I suggested it was going to be the euro, most people watching this video would burst out laughing, even though it's not such a silly idea. But yes, it ain't never going to happen. So the dollar's not going to die. So why is gold going up like it's going up like a rocket? Well, I keep saying it, and I keep saying it. Gold is for war. Trump did a deal with China. We're going to get rare earths, so they say. Oh, whoops. A few days ago, China said, yeah, you're going to get rare earth, but not for military usage. So the Secretary of Defense, oh, whoops, the Secretary of War, what's he got to say about that? Anyway, so gold is for war. And what has changed in that picture? Well, the mess, the terrible, terrible mess. I mean, words are not strong enough for what's going on in Ukraine. That's not looking like it's coming to any sort of conclusion. America versus China, well, that's not looking like it's coming to any conclusion. You know, it's going to be initially, at least, and hopefully will stay there, a AI war. So it's going to be a kind of Cold War and an AI war. And you can see that everywhere you look, Trump's going to be spending untold billions building nuclear power. Why are you building nuclear power, Donald? Oh, you need nuclear power for AI, don't you, boys and girls? Yes, yes, and all that stuff. So the conflict is on. It's not going away. It's not going to get any less tense. It's only going to get tenser. So if you agree with that, that says gold can only go up, or at the very worst, go sideways. This chart, which you saw a little earlier, is what I'm expecting to happen next. It will break out of this range and it will go to near 5,000, and that'll happen sometime sooner or later. So that's my position, but you know, it's not fate, it's not advice, it's my opinion, and it should be very much raw material for your own thinking. So my idea is gold is for war. The world keeps proving that to be a good thesis. It's only going to get tenser. That means gold is going to go up. Now remember, the key date is 2027, but you have to bear in mind that the market thinks ahead of time. it's not thinking of today when you see the price of gold, it's thinking about a year out. So November 2026. So actually, we're grinding towards the 2027 feared date quite quickly. But even so, you could imagine that there'll be at least another year of bull market. And then, of course, who knows what happens next. So we've got many months of upward pressure on gold. That's my take. So anyway, thank you very much for watching. It'd be nice if you subscribe. It'd be nice if you like. It'd be nice if you share. It'd be nice if you comment and all that good stuff. And I'll be back soon. And if anything crops up before then, I will be back sooner. See you. Bye now.
Let's talk Bitcoin. But first, let's talk lunch.
Hello everybody. I've had my lunch and it was very good. Bitcoin. Where are we with Bitcoin? Well, I saw something very funny on Twitter. I'm going to call it Twitter just to annoy some people. X, go on then, call it X. And it was some poor Bitcoin investor that had put up a chart which showed $101,000 a coin, and it had fallen back from 5,000 or whatever it had done. He was saying, I'm getting fed up with this, I'm just getting fed up with it. And I thought, yeah. Well, the market's not there to make anybody happy. It does what it does, has no fear, has no remorse, it does not stop. It doesn't listen to you, you have to listen to it. If you look at the chart, is one way of listening to what the market has done, you will see a pretty bullish chart. I think most people would see that and go, well, yes, it's going up, isn't it? And it's going up, and why won't it continue to go up? It goes up, it goes down a bit, and then it goes up a lot. It's going to go forever like that, and it's going to be brilliant, and we're all going to see 250,000 in 10 minutes time, and we'll see $1 million a coin in by Christmas, I won't say which, and then it's going to be $10 million a coin, and 20, and so on and so forth. And you know, I'm pretty bored with, in fact I've got past being bored with all those people that keep talking that stuff, and I've got in the situation of going, yeah, well, okay, good luck with that. But where are we now? I think we're getting to a very sensitive stage, and we're either going to have that turnaround and go up to, you know, quite a nice level, or what I expect, break down through the 100,000. Now I think that is where we're looking going forward in the not too distant future. So I would be almost surprised if we weren't below 100,000 by Christmas, or sometime soon between now and then, that we end up going to 100,000 and we get a really bearish break. So here's some charts so you can see what I'm talking about. And I think we have seen the top. Now, obviously, all it takes is, you know, solar flare to take down all the computers in the world apart from Bitcoin mining, and you'd get a very, very strong upward move on Bitcoin. So any sort of disaster that drives people to want to turn their money into a very easily movable form will see Bitcoin going up. But if that does not happen, and I don't think anything in the short term suggests that there is anything like that coming, we're going to get a sub $100,000 move. And this is what I see as the potential. These are the levels. So the levels are obviously just above 60,000. And that, I think, is fair to say. We would see that if we get much below 100,000, we'll get to see somewhere near 60. Now, for a crypto winter, which I believe is coming, and just in the same way as everyone's believed it's going to go from 100,000 to 250,000 since last November, I've believed it's going to be coming down from 120,000 to 60,000 anytime since November. It's up in the air which is the right answer. Now, I think it's down to 60,000, and a crypto winter would be 40,000. Oh, that would be relatively stiff. So another way to look at what a crypto winter would mean would be that in the past, when it's pulled back to the previous 4-year high, and that's about 60,000. And I look at the chart and I go, it's probably not enough. I would say we're looking at a 40,000, maybe even a little bit lower than a 40,000 bottom for the crypto winter. So if we get one, and I believe we will, and I've been saying it long enough, a crypto winter means 40,000. Now, a pullback to 60,000, I wouldn't be thinking that, oh, well, you know, it's all over. Nor would I think that it might not be all over. So somewhere between 60,000 at the top of the range and 40,000, maybe even 38,000, that sort of area, for the bottom of the range, is what I'm looking for if we get the crypto winter that I'm expecting. And if we're going to get it, I think we should be getting it, well, before Easter at least. I mean, it's a big time range. But direction is much easier than timing. As well, I mean, I've been wrong about my timing. I haven't really, because I haven't said it's going to be going down, and it hasn't gone down. I've been saying that 120,000 is the top, and I've been spot on there, and I've said there's a crypto winter coming. Well, it hasn't come yet. So if it never comes, I'll be wrong about that. But I think we're getting to the point of exhaustion of that sort of optimism that you've been hearing from everybody who've been saying we're looking at 180,000, 250,000, 500,000, 1 million by Christmas. It's always by Christmas, isn't it? Well, I think we've been pretty sure we're not going to see much above 120,000 by Christmas. There's my charts. There's my prognostication. I think that this current previous high is the high of this cycle, and now it's just a matter of when it goes below 100,000. Because when it goes below 100,000 by much, and if it stays there for more than a couple of days or a couple of moments, a lot of people are going to get scared. A lot of people are going to say, right, well, it never happened. I've been waiting all year. I'm out. And that will cause the sort of cascade you get when you get a crash, because everybody's singing Hosanna on the way up, and everybody's crying and saying it's all wrong and it's all over on the way down. And that's the market cycle that leads to boom, bubble, bust, boom, bubble, bust, boom, bubble, bust. And that is the Bitcoin cycle. And of all the assets, Bitcoin is the most almost predictable boom, bubble, bust, cycling asset out there. Now, in addition, the thing that strikes me, the two Achilles heels in crypto in general, is one, crypto's very, very insecure. All you have to do is read the news on the crypto websites, and all you'll see is multiple millions, I mean multiple tens of millions, sometimes multiple hundreds of millions of dollars worth of crypto being stolen. I mean, nothing like it in banking, nothing like it in other assets. I mean, the biggest bank robberies, the biggest robberies of all time have been in crypto, and probably were only a few weeks ago. Every few weeks, the massive crime of stealing crypto. And every day, I'm sure hundreds of people have their cryptos stolen by people who are phishing and stealing private keys and getting you to click on the wrong link to take over your wallet, etc. And it doesn't matter what people say, there is no such thing as a cold wallet. There's hot wallets, very hot wallets, there's cool wallets, there's quite cool wallets, but there's no such thing as a wallet that's cold. There's no such thing as a way of protecting your private keys completely. I mean, if there is, please tell me. But, you know, you can inscribe your private keys on steel plates, and then what? Put them in a safe. Well, the safe's not safe, is it? Oh, you can hide them. Well, what happens if you hide them in a old teapot and your wife throws the teapot away? Oh, you can get some sort of gadget and you can put it in a tray of ice cubes and freeze it in your freezer, but then somebody robs your freezer. I mean, there is no 100% safe way of keeping crypto, and that's a giant weakness. Now, the other weakness is quite new, and that is that institutions and Wall Street are now an intrinsic part of the game. The whole point about crypto, the whole value of crypto, is outside the established market for money and financial services. And it was going to turn it all upside down. It was going to make everything else obsolete. Wall Street would be obsolete. The dollar would be obsolete. Money, old money would be obsolete. Everything would be obsolete, and Bitcoin fixed that. Remember that? Bitcoin fixes this. Well, now Bitcoin is just another asset within the tentacles of Wall Street. And that is not a good thing, because Wall Street extracts value from financial services for their own purposes. If they make money out of gold or silver or NVIDIA or Bitcoin, they buy a yacht or they buy a house. They drain the market. So they drain money from markets by providing services. Well, Bitcoin's a market, and it's now intrinsically connected to Wall Street and institutions, proper institutions, not just companies that call themselves institutions and have just popped out of nowhere. Proper investment banks, proper Wall Street firms have now got their, and I'm going to use the word, fangs into crypto. Well, I don't see that as a good thing at all. And you could say the same about government. Government has now got its fangs into crypto. And, these are two types of institution, if you want to call them, that extract value from markets. And in a way, don't give value back. I mean, they give services, they give platforms, but the actual value of liquidity in those markets, generally speaking, they extract it. That is not good for the old crypto that we loved, that went from 10 cents to $60,000. Now we've got an asset at $100,000 that's just another asset attached to the financial services industries of old. And I think that puts a lid on the whole picture. But on top of that, I think after this crypto winter, if we have one, and I believe it's not too far away, after that, there will be a change in the way that crypto works, not intrinsically, but the focus that everybody has on crypto will shift. Because everybody thinks of it in terms of cryptocurrencies, of new money, novel financial services with services outside of the old school way of doing things. And they've been absolutely fixated on the money to be made for the emergence of these new private sector monies like Bitcoin, like Ethereum, like Solana. Well, imagine that focus shifted away from crypto being about cryptocurrency to crypto being about blockchain products, unique products that couldn't be done cost effectively the old way, but the sort of product that can be unleashed by blockchain technology powered by its own issuing currency. Well, that is the promise of blockchain. That is the promise of crypto. And I think that is what we're going to see the next time around in the next crypto cycle. And that's going to be huge money to be made there. And of course, it is going to be kind of facilitated by government, kind of facilitated by Wall Street and the institutions. But ultimately, it's facilitated by the dream of blockchain plus cryptocurrency plus permissionless business. And that is the original crypto dream. And I think we'll see a lot more of the broad crypto dream coming next time round. So that's where I will be keeping my eyes out for, because that's where next time round the big money is to be made. Anyway, thanks so much for watching. I'll be doing another one of these soon. See you all then. Bye now. Hello everybody, here's my new rant. Well, markets are driven by money supply. If there's not enough money to go around, markets don't go up, because you can't buy stocks if you don't have any money. Now, when money's printed, it goes into the system, and people like banks and people like trading companies get hold of that money, and it goes into assets and prices go up. So what you have in the current system is money's printed, it goes into cash flow, into supply, it goes to the sort of people that buy assets with it. So real estate goes up, stocks go up, and it's not as powerful inflation creator as it would be if, for example, you handed that money out in stimmy checks. So that's the way that QE has worked for many, many years now, and we've been in a period of QT in America and also elsewhere, but America's the one to watch because that's the 800-pound gorilla. Now, when COVID kicked off, the Fed and all the central banks pumped vast sums of money into the system to keep the whole system going, paper over that huge chasm of people not doing any work and basically being put on leave for months and months upon end. And that money in the end created inflation, and the central banks have been pulling out the excess money from the system using QT as the way to drain it out. Now in America, the excess money that came in from QE ended up in something called the reverse repo. Now that is a system that the Federal Reserve uses. It says to banks, hey, that money I kind of handed out, if you put it back in this account, we'll pay you interest on that. So, if we're going to pay you 3 or 4% on that, you're not going to lend it at 5 or 6 or 7% to some dodgy people that may never pay it back or may go and spend it and create inflation. So put it in our reverse repo. And the banks go, yeah, sure. I'm absolutely guaranteed with my money. It's safe as houses. It's free money. Thank you very much. You could see how much free money there was in the system by looking at the reverse repo. Now they've been draining that money out because they've been lowering their balance sheet. So by lowering their balance sheet, I think someone agrees. That, by the way, is thunder. Looks like it's going to be a huge storm. Anyway, the powers that be are obviously listening. So the Fed lowers its balance sheet, and that drains money out of the system, and that drains excess money out of the system, which drains money out of the reverse repo. And here it is in chart form. You can see all the excess money has been drained out and is now gone. But what's actually happened is it's gone negative. So there's now not enough money in the system. And there's another system called the standing repo facility, which enables the banks to go, I need money, and get it immediately from this big bucket of money. And that was invented for the banking crisis last year, when Silicon Valley Bank got into trouble and all the other local banks got into trouble. And they made this big bucket of cash facility so that all those banks could dip in and make sure that there's no shortage of money, and that all the different banks don't pull their drawbridges up and the whole system seizes up. So that facility was created for a situation where there's no excess money, and then suddenly there's not enough money to go around because something kicked off that was unexpected. Well, right now, the SRF is being used. It actually has been drawn upon over the last few weeks, couple of 3 weeks. Now, this is a chart of the Fed's kind of emergency operations to inject money into the system. And here it is. So that's a pretty scary chart. Oh, look at that injection during COVID. Yeah, you could see why they'd need it. Oh, why has it started again? When the Fed is injecting liquidity, i.e. cash, into the system to keep it running, you know there's a problem. And that problem, of course, is the government shutdown. And the Treasury is allegedly meant to hoard cash when that goes on. So they've been effectively draining money out of the system. People haven't been getting paid. All sorts of money that should be coming into the system hasn't been coming into the system. So that has intersected with there not being enough money or a surplus of money in the system to take the strain. That has led, I believe, to what is going on in the markets, which is increased volatility, increased ranges, one day up like a rocket, next minute down like a rock. And that's because the money supply has been disrupted by the US government shutdown and this position of there not being quite enough money in the system, or the system being in a state where the actual regulators aren't sure whether there's enough or there isn't enough. And of course they're being told by the market itself there's not enough, and therefore they're injecting cash into the system. Well, that's a pretty volatile and certainly disruptive situation, and you're seeing that as a disruption in the equity markets and in the crypto markets and in the halt of the rise of gold and silver, for example. And it's all come about, in my book, because the money supply has been disrupted. Now, that means there's a call. Option one, are the wheels coming off? Are they going to muck it all up? And are we going to have a cash flow disruption period and therefore a crash? Or is the Fed going to sort it all out and it'll all be fine in a few days' time? Now, I think it's the latter, because you're not seeing any headlines about this stuff, are you? You're not seeing people jumping up and down saying, oh, the Fed's having to inject money, oh my God. No, because they're just getting on with it and getting it done. So they're avoiding a crash, they're avoiding a financial disaster, emergency, or whatever you want to call it, because they're actually on it. And they have already been effectively bailing out the system, or you might say regulating it, from actually having a disruption, having a emergency event. So all you're getting is a wobble in the market rather than, a 10% move. And, in a way that's reassuring, in the same way as looking at that chart isn't. Yeah. So right now, over the last few days, last couple of weeks, there has been emergency injections of liquidity into the market because there hasn't been enough money around to actually sustain the economic system. And the Fed's been working to keep the wheels on, and so far so good. And I think now that the government has reopened, it's only a matter of days before everything goes back to normality. There you go. Tight squeeze as far as money goes, tight shave as far as the markets go. But I think in a few days, at the most a couple of weeks, we'll be back to normal. Anyway, thanks very much for watching. There'll be another rant soon, a couple of days or so, and I'll see you then. Bye now.